Stacks, known by its token ticker STX, is one of the most unique projects in the crypto ecosystem. It aims to bring smart contracts and decentralized applications directly to Bitcoin. Yes, Bitcoin. While Ethereum and its competitors dominate the DeFi and smart contract space, Stacks is betting on Bitcoin's unmatched security and brand trust to unlock a new layer of decentralized potential. The big idea: build on Bitcoin without modifying its base layer. Let's dive in. Stacks was originally born out of Princeton University research back in 2013, spearheaded by Munib Ali and Ryan Shea. The project was initially known as Blockstack. It had one of the earliest SEC-qualified token offerings in 2019, a rare move in the crypto space, giving it a strong regulatory foundation from the start. Blockstack later rebranded to Stacks and shifted from its own chain to a more integrated Bitcoin-focused approach. Munib continues to be a central figure, now leading Trust Machines, a company focused on Bitcoin applications. His vision is to unlock Bitcoin's $1 trillion in capital for productive use cases. At the heart of Stacks is its consensus mechanism called Proof of Transfer, or POX. It's a twist on Bitcoin's proof of work. Miners commit BTC to mine STX, and the BTC is distributed to STX holders who stack their tokens, think staking, but with Bitcoin rewards. This elegant system ties STX directly to Bitcoin's security and value layer, while incentivizing long-term holders. It's also an ecosystem-native yield mechanism that doesn't rely on inflationary emissions. Stacks uses a unique smart contract language called Clarity. Unlike Solidity on Ethereum, Clarity is a decidable language, meaning developers can know exactly what their code will do before it runs. No guesswork. This focus on predictability and security makes Clarity ideal for building serious apps, especially those handling real assets like Bitcoin. The downside is a steeper learning curve and fewer devs familiar with the language, but the trade-off is worth it for many. The Stacks blockchain doesn't compete with Bitcoin, it complements it. Transactions on Stacks are secured by Bitcoin through POX and can anchor their state changes directly onto Bitcoin blocks. This is critical. It allows dApps and smart contracts on Stacks to settle with Bitcoin finality. Bitcoin becomes the trust layer. Stacks is the programmable layer. Together, they form a powerful full-stack environment. Pun intended. GitHub activity on the Stacks project has been consistently strong. The core repos like Stacks, Blockchain and ClarityLang show frequent commits and updates. Developers are active in discussions, and the community contributes heavily to SIPs, Stacks improvement proposals. In a bear market, consistent dev activity is often a sign of long-term conviction, and Stacks doesn't disappoint. Let's break down the tokenomics. STX has a total supply cap of 1.818 billion tokens, with over 1.4 billion in circulation as of mid-2025. The initial distribution included miners, early investors, a treasury reserve, and the SEC-qualified public sale. Importantly, STX is deflationary in nature, no inflationary staking rewards. Instead, BTC rewards are generated for stackers via the POX mechanism. This design links STX's value to real BTC flows, not just speculative hype. STX has seen volatile price action, like most altcoins, but its staking-like feature, stacking, gives holders consistent Bitcoin yield. That's powerful in a world where native yield is rare and often unsustainable. The stacking mechanism is non-custodial and runs on predictable reward cycles. This has attracted a dedicated user base who view STX as a long-term position rather than a quick trade. According to DeFiLlama, TVL in the Stacks ecosystem remains relatively modest, hovering in the low tens of millions. However, this doesn't tell the whole story. The real value lies in Bitcoin settlement and utility, which isn't always captured by DeFi dashboards. Protocols like Alex, a DeFi platform on Stacks, Arcadico, and Bitcoin name system BNS form the core of the ecosystem. Expect this to grow significantly as Bitcoin L2s gain traction. The Whitepaper for Stacks outlines a vision that was ahead of its time, a user-owned internet with Bitcoin as the base trust layer. It focuses heavily on decentralization, identity systems, and economic alignment through POX. While some aspects, like decentralized identity, are still evolving, the foundational principles laid out are being realized step by step. Now, let's talk roadmap. Stacks 2.1 launched in early 2020. 3. Improving cross-chain bridges and speeding up the network. But the real excitement lies in the Nakamoto release, expected to arrive later in 2025. This update aims to bring near-instant Bitcoin finality to Stacks, meaning dApps on Stacks will be able to settle transactions with Bitcoin security almost in real time. This could be a game changer. Financial sustainability is a key topic for any crypto project. Stacks has multiple revenue paths, transaction fees, ecosystem treasury allocations, and developer grants. Trust Machines and Hero Systems, two major contributors, are VC-backed and building sustainable infrastructure around Stacks. Long-term, this creates a strong support system without relying entirely on inflationary token rewards. Legal clarity is another strength. Stacks conducted one of the few SEC-qualified token offerings and completed its transition to a decentralized network. In 2021, the STX token was deemed sufficiently decentralized and no longer required SEC oversight, placing it in a unique position compared to many US-facing tokens today. So, what's next? Aside from the Nakamoto upgrade, we'll see a stronger DeFi push. Projects like Zest Protocol aim to bring BTC native lending, while DAOs and decentralized identity layers mature. If Stacks can capture even a fraction of Bitcoin's dormant capital and integrate it into apps, the upside is massive. The project is quietly building the Bitcoin L2 narrative that Ethereum once had for ICOs. Stacks isn't trying to replace Bitcoin, it's trying to evolve it. In an era of meme coins and L2s chasing TVL, Stacks offers something different. A fundamentally sound, security-first, and Bitcoin-native approach to smart contracts. The road ahead will depend on adoption, dev interest, and successful execution of the Nakamoto release. But make no mistake, Stacks is one of the few projects trying to give Bitcoin programmable superpowers, and that alone makes it worth watching. That's the end of this 10-minute deep dive. If you enjoyed this explainer, hit like and subscribe for more unbiased, data-driven crypto content. Drop a comment on what protocol you want covered next. And until then, keep your bags packed and your research deep.